Jim Robb from the Livestock Marketing Information Center is our cattle market analyst this week. The USDA Tuesday released meat price data for the month of July, showing a new high for all fresh retail beef at nearly $5.56 per pound. The cost is 5 cents above June and 60 cents per pound more expensive than July 2013. As we've mentioned, large crops of corn and soybeans are making for cheaper feeder diets, but those animals coming into the feedlots are, to say the least, expensive. We talked with Jim at the Goodmanson Sandhills Lab Open House Wednesday near Whitman and began by asking him to characterize the current feedlot profit margins.
Feedlot margins on the closeouts, especially in July, were excellent. We had the best margins that we had in any month in our estimates since November 2003. So we've had 6 to 8 months of excellent feedlot margins. But as we look ahead here, those margins are certainly going to deteriorate with our lower fed cattle market and super high feeder cattle costs.
That's right. What we're seeing out here in this area of the state, compare what these producers will see for their returns, cow-calf producers that is.
Cow-calf, these are unprecedented returns that we'll post here in 2014. Producers are actually going to have tax problems that are significant. We have record high calf prices, $100 a hundredweight over a year ago. We have costs of production that have moderated a little bit, and we've had a very good grass year. So for cow-calf operations, we're looking at the highest margins. LMIC has been calculating margins since the early 1970s. And even if we adjust for inflation, we've really never seen anything like this.
Do you expect prices in both of those sectors to continue to rise?
Most of the run-up in prices, dramatic here in 2014, is behind us. But on an annual average basis, we can certainly have a situation where fed cattle and feeder cattle and calf prices continue to rise a little bit in 2015, maybe again in 2016, but somewhere in the next few years we probably have an annual top in the market that is on the horizon.
And so far consumers have been supportive of this move.
It's been one of the real reasons we've had a very strong market has been the demand side of the economic marketplace. And the consumers, both domestically and foreign, have been surprisingly strong in their fundamental demand for beef, especially in the second quarter of 2014. And it's also been in the other red meats. Their demand for all the red meats has been very strong. So this has been a very strong consumer profile. Probably indicates that the U.S. economy is a little bit stronger than it appears on the surface, but also the quality of the beef product still remains very attractive.
You said today that for the domestic buyer, you think that those that will leave have already left.
In economics, we have a demand relationship, and we price and quantity, but consumers really don't buy a little bit less beef. Many of them move away from a category as prices go higher, and many of those consumers that were sort of marginal beef eaters and are very price sensitive have already sort of left the beef profile. Certainly the ones that remain have the income potential and have really shown that they're willing to spend higher prices that really more than compensate for the quantity declining in the overall market sense.
You touched on this, but describe the foreign buyers for beef right now.
Foreign buyers have been surprisingly strong. They tend to be much more price sensitive than U.S. consumers are in most foreign markets. And the quantity of beef that we now export on a tonnage basis for this year should be above a year ago. The dollar value of our beef exports will be record large. So that foreign demand component has really been one of the real surprises in this marketplace. We thought with our record high beef prices we'd see some more dampening in the beef demand profile. That really hasn't occurred.
Do I understand correctly that you believe the neighbors in North America, specifically Mexico, will be more important than maybe gaining a market share, a bigger market share in China?
I think we look over the next 3 to 5 years, the border countries to the U.S. and especially Mexico will be the real leaders on our export demand profile in the beef complex and the meat complex overall. As we ramp up pork and chicken production in the U.S., we'll see very strong markets in Mexico, which will help absorb those supplies. So I think really looking closer to home in some cases will be one of the keys. We've seen recently that the Russia and China continue to ban U.S. beef products. Those are probably things that are a long-term fix. But in the next 3 to 5 years, I think put your money on the North American markets, especially from a beef industry perspective.
How much competition is beef seeing right now from either pork or chicken?
Surprisingly little. We've had real disease problems in the U.S. hog industry. Chicken industry's had some real struggles in building their breeder supply flock. So the first half of 2014, it's really been a supportive factor for beef prices. Consumers have not seen the real rollback in pork and chicken prices at the meat case, for example. We look ahead to late 2015, 2016, we're going to see more competition ahead coming from the U.S. pork and poultry sectors. It's going to be a little bit of a headwind to how fast beef prices and cattle prices can increase.
As we've mentioned here, these producers in this area of the state will see very decent profits this year. What are some options that they should be looking for to what to do with that money?
We really need to start planning now. We need to make some initial estimates of what our incomes are going to be this year, look at the tax implication, visit with a tax advisor, and then really look at these management options on their ranch and how to make sound investments that are going to pay off in the long term. Sort of an unprecedented set of returns in cow-calf country probably mean we need to manage earlier, and we're really going to have to manage the tax implications much more than we probably ever have had to in cow-calf country.